You're tuned in to Agriculture Today, and we start our Friday show with the grain market update from K-State grain economist Dan O'Brien. Dan, thanks for joining us today.
Thank you, Shelby.
Dan, what are we seeing in the futures market along with all this movement and volatility we've seen in the past week?
Well, I think you've described it well, and that uncertainty about trade directions going forward. Again, the back and forth of discussions about tariffs, this and whatever else that, much less all that's going on with regard to geopolitical conflicts in the world, particularly the Black Sea region, brought a good amount of uncertainty into these markets, and that follows on the pretty bearish projections that came out of the USDA Ag Outlook Conference last week on Thursday, Friday. So lots going on. We did see closes yesterday on Thursday, the 6th of March, at 449 and a half for March contract. And that's, we're into delivery period now. So we're really focusing more on the May contract, which is 464, and the D's contract at 451. So after all this week's volatility, where we went lower than that, and we came back, and again, yesterday for corn, the May contract closed up 8.25 cents. We almost gained back what we lost coming out of the USDA report and USDA Outlook Conference, everything else that was happening. So did see that come back. For soybean futures, yesterday closed up 16 and a well, yeah, 15 and a half cents for the May contract, 1027 and a half. And again, almost exactly where we were a week ago. So movement, volatility, not a lot of direct change. Just is what it is. The November contract, by the way, for soybeans at 10, 34 and a quarter. The D's contract for corn 451. So with all the uncertainty, we're holding in pretty steady on those new crop contracts, and I think that's just indicative that hey, there's a lot of our own crop production uncertainty in front of us that has to be dealt with. So you still have some support there. The wheat contract, Kansas City, excuse me, CME Kansas hard red winter wheat closed on Friday, excuse me, yesterday, Thursday, 565 and three quarter, up about 8.75 cents. So again, even there, it's movement to the high side. July contract 579 and a half, also up 8.25. So interesting. I would say that you still have quite the set of carries. At least that's how I view them, carrying charges in the wheat contract. We from the March to May contract, over 7 cents a bushel a month. May to July, almost 7. From July to September, still moving higher to 7 and 3/8, and then on to D's up 7. So that type of carry in the wheat market won't stay around. If we get to the into mid-May and we still have, if pardon me, if we get into mid-April and we still have wheat at 565 and three quarters, that would mean we haven't had any big crop threats, et cetera. And we probably start to see a decline in the wheat futures uh, wheat futures complex for hard red going into the future. So again, that's thought provoking to me. We show so much in terms of positive carry in wheat, but if we stay at these price levels again below $6, I would wonder in the last half of the year if you'd still have these type of price levels. So a lot depends on where that's going. I should add in, our colleague Chip Redman has been talking a lot about weather prospects for the summer, and I don't know exactly all the details of what he said, but he does raise the prospect of not insignificant risk of hot, dry weather. So we just talked about where new crop D's corn's 451 as of yesterday. Again, November 1020 and three quarters, and here July at 579 and a half. These are not top end prices. They generally we would see think of something with a 5 in front of it, an 11 or 12 in front of it for soybeans. Pardon me, 5 for corn, 11, 12, 13 for soybeans, wheat $6, $7 as being drought affected prices. So we're sitting here right now in these markets, really not pricing in any really hardly any of that risk, other than maybe in wheat with its strong carries. But so there's a lot of what we've talked about. Movement and uncertainty within the last week or so. I think the weighing of these weather risks probably is likely to give us even more focus on what could happen if we get that type of hot, dry weather, and brings at least the potential for a lot of price movement and volatility heading off into spring. Again, April, May, June, July. We'll see where all that goes. At this time, with a lot of the issues going on in the world economy, and again, trade contentions all up in the air. We're tending to bid the downside on where things are at, but otherwise, we have a lot of risk in front of us. And if you don't mind, in taking some of that point of view and bringing that back into those USDA projections for this year. So take corn for instance. So if we end up and have something other than the USDA's projection, 181 bushels an acre, 15.6 billion bushels of production. And let's say we get instead of 181 bushels an acre, let's say we get something like 170, 178, 3 bushels an acre less. Well, that's about 185 to 190 million bushels less than what we'd projecting. What we project if we would really have a serious drought, well, say 175, 176. That's moderately serious in terms of where we've been. That's 5 bushel an acre times 90. Then you're taking half a billion bushels off of that production number down to 15 billion, and the ending stocks numbers. In essence, you'd bring about rationing of usage from what the USDA was talking about, and you'd be closer to 15. Excuse me. About 15, 1.5 billion, 1.4 billion bushels carry out, and we probably wouldn't be sitting at $4.20. It'd be something, 475, 450 thereabouts. And for soybeans, that again, the USDA's balance sheet came in strong yield projection, 52.5 billion bushels. I think I think we've struggled to get anywhere near 52, 51 and a half, 52 in the past. Well, if we take again, if you would take that down to 50 bushels an acre, so that would be about 200 million bushels on total, 210 by the time you look at the harvested acres. Instead of 4.37, you're down closer to 4.1 or 4 billion bushels. Ending stocks, instead of 320 million, well, you're down to 150 to 200, and you're probably not looking at $10 soybeans. You're looking at something much higher. So you've got all that in play, and wheat would be affected as well. Although we've with all that's happening in the world and world wheat market, it's been hard to see a lot of price responsiveness. But still, dry conditions would impact that domestically, and impact the wheat market domestically. And again, instead of 550, we'd see something to the higher side, closer to six plus, I would think. So you had that situation, and I guess Shelby, as we sit here in early March each year, knowing that April, May, June, July, all that in the field, crops planted, crop development those typical concerns that happen. I know where we're at right now, but gosh, there's a lot of risk that has to be dealt with heading on into the future, and it just looks like where we're at this point is I. You always you're hesitant as an economist to make a projection, but if we get this type of domestic crop production risk coming about in any way, then the prices we'd be looking at now would be pretty much the low ebb. But yes, I know exports are important and absolutely impact things, but once we start to focus on our own production prospects, then we shift gears really to looking at crop development. And yeah, again, although exports will be important, it'll be the size of supply that'll I would think will mainly drive the markets, and we'd see where it would go from there.
And when you see those when you see those pre-report estimates and projections, did you see any surprises?
Yes, there's a report coming out on Tuesday. That'd be the March March USDA WASDE report. And really, when you look at the wheat numbers, the corn numbers, soybean numbers, pretty much steady as she goes in terms of the March estimates being pretty much the same as for the February numbers, February 11th, I think it was. The corn number is down about 25 million bushels, down to 1.516 billion. So that there's some expectation of continued strong usage of corn that would be supportive to the market if that came about. We also had seen a projection, expectation that the USDA will continue to trim away at the Argentine corn crop number. Again, the projection that coming out of February was 50 million metric tons. The lowest trade estimate down to 47, the average about 49. So there's an expectation there of some damage. You know, it's hard to say what the USDA will do. However, when you look at the drought maps in that part of the world, it looks like that. It doesn't look like a well watered garden down there. It looks pretty dry on their maps, and but again, when you look at the other projections, almost no changes. In our materials that we put on Ag Manager, you can see the latest weather maps that are available around the world, and depending on which map you see, you're looking at parts of Europe awfully dry, and that would affect wheat markets, other feed grains like barley, et cetera, and what's coming out of Russia. Parts of South America dry, but again, we're at this time, I think it's fair to say, well, that there's still time before those crops actually come. However, there are areas of concern around the globe for major exporters that still have to be resolved, and the possibility of that crop production uncertainty having a positive impact on prices going forward.
Dan, I appreciate you taking the time to join us once again.
Thank you, Shelby. I appreciate it.
That was K-State grain economist Dan O'Brien. We're cutting to a short break now on Agriculture Today, but stick around because we have more for you up ahead.